All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. One of the toughest markets in the world to trade is a bull market that is not going anywhere. And it's a market condition that we oftentimes see during some summer months. We can see it during the kind of Thanksgiving time period as well. But it's one where, the market goes up, right? And you look in hindsight and it's like, market's up, market's up. But really, it's only had 2 or 3 up days. The rest have been pretty flat. And when you look at most stocks, you have some explosive ones. And then, what pops one day drops the next. And what drops one day pops the next. And it can be a little bit maddening for traders. We've managed to kind of walk through it pretty well. Yesterday was a little maddening. Today, a little maddening. But we're sitting here, market, just not doing much. There's no real volume in it. There's no real catalyst in it. I get a kick out of the argument that investors are waiting for earnings, in order to get in. Because bottom line, if earnings are what they're looking like, it's not going to change investors in a huge way. And what this market absolutely is thirsting for is some sort of change, some sort of different story. And right now, we are not getting a different story. We continue to see a very mixed bag of economic data. For example, the German zoo survey hit a new low or went negative for the first time since 2010. And then this morning, we get a pretty good retail sales number. So we see this kind of back and forth a little bit. We have a lot of Fed speak here this week. We've seen bonds pull on back in the last week and a half. So it's just one where we're not seeing a whole lot, and the volumes reflect that. This morning's volumes in the market, just non-existent. Just non-existent. We've had low volumes the last few days, but this morning's volumes, wow. What does that say about anything? Well, it just simply says nothing's really changing, right? There's not a real dynamic change in the nature of the market right here, and I suspect that there's not going to be without some sort of catalyst. And by catalyst, I'm talking about something that changes investor perception, changes trader perception. Not some of these kind of little small rumor type things that are pretty meaningless. So let's go take a look at the challenge. We have Intel and we have Target. Intel took a dip here today. It's at 320 here on the option. Let's come in and plug that in. So we're at 320 here. Remember, we pulled 40% of our position off yesterday, so we're still running with a nice gain, but the exit level's 49.11, and right now Intel is trading at, 49.48, so, nothing to change or adjust there. Then we have Target, which had a really bad day yesterday, and reacted favorably early on this morning to the retail sales data. It almost looked like it was going to go negative, but has snapped back here a little bit in the last few, and so 222 on the option here. So, that leaves the challenge at about 1,200 or 12,000 in gains here. Sitting here running with Intel and Target. So we have about what? We have about 5,300, 5,300 here on the table, so plenty of cash available for another trade. And right now, as it sits, there are no new trade triggers on the board. Now we have a couple crossovers, but nothing too significant right here. Let me show them to you after I update that. But we have ConocoPhillips, which is crossing over to the downside, but not triggering bearish here. This is one that triggered bullish last week, along with Chevron, and both the stocks have kind of done the same thing. They had a few up days and then gave on up, but Chevron, it doesn't quite have the downside 3-7 crossover in it. And then we have FCX, which has an upside crossover coming into it, but consolidation risk is very high on this stock. as it sits right now. This is a stock, though, I've been watching very closely over the last month. Earnings, everything else. I really believe that as goes FCX, so will go global markets. And I think yes, we can find some holes in that logic, but I think when it comes to FCX is not exactly investment premium, for a market with a lot of unknowns. But it is a high reward potential in a market that sees economic growth in the future. And so, while we see investors being a little cautious here and there, I think if we see FCX really kind of hold up and push higher, I think that's a very good sign that the overall market is going to be just continuing to march on higher here for the next while. So, very interesting stock. Not giving a trigger here today, but very interesting one indeed. Now we also have earnings season. Anyway, that's it for the challenge. Nothing really to do there. I will not be on video this afternoon, but any trade triggers will be posted in here. We will also, if need to exit something, you'll get the alert on it. If we enter something, you'll get the alert on it. And I will post a note into the message center as well, so you can access it there. But I will not be on video here this afternoon. Now, we had some earnings come out in the market here. Yesterday, we saw Citigroup. This morning, we saw JP Morgan. We saw Goldman Sachs. We saw Wells Fargo. I don't think we got a new story from the banks. It's not a new story. It's the same story. And it's the same story that JP Morgan is a freaking cheap stock. It is. It's just very inexpensive. It's trading at 1.5 times book. It's got a lot of positives going for it, and from a pure valuation standpoint, it is incredibly cheap. If we look at the stock over the last 2 years, this has been a year and a half, 18-month consolidation here for JP Morgan, and you know what? Higher lows all around. Looks to be busting into a new high, here on the weekly, so very positive weekly chart. And it's one where the fundamentals support it. To see this stock trade into the 140s or 160s based on the fundamentals, not very difficult to see. Is it ready to go there yet? Yeah, well, obviously we'll see. There's, timing is always, when it comes to some of these things, can always be a little tenuous, but I think if you're looking at the second half of this year, if you're looking at the beginning of next year, and you have a bullish thesis, I think JP Morgan's a must-own. I think it's an absolute must-own. And, one that, Goldman Sachs, you can make some bullish arguments, and it has a nice little breakout action. But I think when you talk JP Morgan, you're just talking something a little bit different. And, something that, kind of best of breed there, right? Goldman used to be kind of considered the best of the best. Not anymore. It's JP Morgan all around. And Bank of America is creeping in there. Right? Bank of America's creeping in there. Wells Fargo is kind of, not kind of. It's definitely, still dealing with a big reputation hit. And, it's still trying to recover from, just some of the very bad decisions and some of the fallout from some of those decisions. But the bank earnings don't interest me very much. Yeah, it's the same thing. There's same thing. There's nothing new with the banks from what we see here so far. But you know what? There's this little company called Canadian Pacific, and it's a railroad company. And, we're about to have this economic collapse and all of that, right? And Canadian Pacific hitting new highs, right? Okay, fine. I can get behind that. I can see that. But when you listen to what they said, Canadian Pacific said that they are seeing growth in all segments. It's not being driven by one or two little pieces here and there, but in all segments. That's a pretty powerful statement that we heard from Canadian Pacific. and it is definitely helping the railroads, here today from CSX, pushing into a new, well, $80. It hit it back in May, but, pushing back up higher here. We see Kansas City Southern, which is, continuing to push on into its highs here, along with Canadian Pacific, Union Pacific here, very nice day on it, but it's one of those where the earnings out of Canadian Pacific speak volumes as far as what the environment is out there. And so if you listen to what JP Morgan said, that, hey, the Fed is going to cut 3 times this year, and we have some of the economics actually starting to improve, and we have the Fed cutting rates, it lays a very interesting cocktail. It creates a very interesting cocktail, and it creates the cocktail that the bulls need to say, you know what, 3,000 on the market, 3,000 on the S&P, forget that. We're going to 4,500. Right? We're going to 4,500. And yeah, that may sound ludicrous, right? 4,500. That's, 50% higher from here. That's insane, right? That's absolutely insane. Well, right here in 2012, when we had the Euro crisis and all of that, right? And the Fed has quantitative easing, everything else, the S&P's at 1,300. It's more than doubled since then. And done so in what has been one of the more smooth fashions here for the market. Doesn't mean we're not going to have pullbacks on the way, but we have Fed rate cuts. We have the economics picking up the way that they are in terms of what we're seeing out of some of these companies early on. I mean, even J&J talked about revenue growth. Now, their earnings are a little misguided there. They're a little skewed there because of a one-time sale. But, we're even seeing revenue growth within J&J. Yeah, drug, yeah. And I don't think J&J is worth buying on their earnings. They still have the big headwind right now with the government. But, if we start seeing more companies, talking the way Canadian Pacific has talked here this morning, or talking the way JP Morgan has talked this morning, the market is just starting to move higher. It is formed a base and just starting to move on up. Now, it's never going to be smooth, and there's a lot of ifs in that statement. But if you look at just kind of, what is transpiring, at least so far, it is a very interesting setup, a very interesting mix here for the bulls, and one that, man, if you were to throw a Chinese-U.S. trade deal on top of that, wow, right? Wow, and the skeptic in me basically says, hey, the U.S.-China trade deal is done. It's done. They have it. It's done. They know what they want, and they could sign it. They could make it happen within 48 hours. The skeptic in me says that they have that, and that all that they're waiting for is for the U.S. Fed to start cutting rates. Because if a trade deal happens, the Fed could go back on their rate cut. And that's just something that, we know that the President of the United States does not want. He wants rates cut aggressively, and, it's one of those where I would not be surprised to see the Fed cut rates and the next day, announce that, hey, trade deal, it's in the works, and 48 hours later, trade deal's done, signed, delivered, and now we have a rate cut, we have a trade deal, and, it's a very interesting recipe. So, that's kind of the optimal bullish thesis, right? It's the optimal bullish thesis for, for the markets, and, a lot has to happen for that to happen, but you think about what's more plausible, that happening or everything falling apart. With the incentives of those in power, what's more plausible? And, it's very easy to see what's more plausible. It's also very easy to see that, this market still has a heck of a lot of bears, out there when it comes to sentiments. Thanks for hopping on. Have yourselves a fantastic day. Again, I will not be on video here this afternoon, but I will be back with you tomorrow morning, and I will have some notes into the message feed about actions taken for the challenge here this afternoon. Again, thanks for hopping on, and we'll talk to you later. Take care.